Hi traders and welcome to Pepperstone's technical analysis wrap on Friday the 26th of June. So we've seen a bit of a quiet end to the week really. It's been more a scalping environment. We haven't seen the really big moves, but there have been some good scalping opportunities with the markets at reasonable support and resistance zones. So we'll jump straight in and check out the major pairs and see what we can identify for the days trading ahead.
So we'll start on the Aussie, we'll go to the daily. The Aussie USD is, caught in this little range here. The long trend that's been in place for quite some time has, clearly come to a bit of a pause. It's finding a lot of support here on the 20 moving average. It's done it basically, 5 of the last 8 days. So it's no different here. We can see that this is a support and resistance zone that we've got marked up. It's no coincidence that the 20 is holding it up here. So there is a fair bit of pressure to actually take this long. The buyers have got a fair bit of work to do to make it a new high, but that said, the sellers have got a real job in front of them trying to push past this support now. So it's an interesting one. Look, one of two things is going to have to happen. It needs to either make a new daily high above these candles here to give us an indication that it's going to bounce off this level properly. So it needs to really close above that 69.80 on a daily to give us the confidence it's going to go long, or we need a daily close below the 67.80. So if we get that, then it's broken those two clear zones, and it really sets itself up to get back down into the sort of that mid 66 level. You're going to have a 200 moving average and this support zone here that was support and resistance previously. That's going to be the next target if it breaks down from here. And that probably is my preferred trade. I would probably prefer that it did that because it makes a little bit more sense from how the market's been traveling, because it has shown this weakness. I don't really like seeing so much consolidation before a big move up. And we know that the 70 is a very big stumbling block. So I think both of them are trades, and I'd take both of them if they are presented. But my preferred one is the short to break below here, basically break below the 67.80, and then aim for this very strong support level around that 66.60 area. So we'll move on to the US dollar CAD. Look, this one is threatening to go higher now. It's almost got the series of higher highs and higher lows. I'll blow it up a little bit. It'll make it a little bit clearer. But you can see that the daily has closed above the 20 moving average. So that's obviously an important sign. You can see that really good hammer type candle here at a good place of support. Came off that resistance that was there. Really, really good candle. Started off a nice little trend, and it's been, even though it looks a little bit sideways on the daily, these last couple of days have actually been some pretty good trends on the 15-minute chart. If we go back down to a 15-minute, you can see that there's been plenty of opportunities to take this one long. So really good opportunities on the smaller time frame on the CAD. It finds itself at an area now that it's got a little bit of work to do, obviously. It needs to close a daily above this level here. And it needs to break the 50. Once it does that and it's got the 20 and the 50 behind it, there's really no reason why it can't push on to the 138.80 to 139 area, which is the next serious resistance. That was a very strong support level when it broke that triangle. So that was the last break, and that's where we can anticipate this one going if it breaks higher. It's been, like I said, it's definitely channeling on the daily. There's no question about that, and it's got the 20 holding it up from the bottom. So the preferred trade here is definitely on the way up. And we'll look at the dollar index and see what that's doing. That's going to give us a little bit of a guide as to what we can expect this one to do. But by our preferred trade, this would be breaking above here and closing above these levels on a daily, and taking it to the next resistance level, which is going to be that sort of 139 area. All right, we'll go over to the US dollar Swissy. This one really hasn't shown as much power as the CAD in a way, with the dollar index strength that we saw. Look, it's still doing it, but this has found itself in a place where you're not going to get really great opportunities. You could argue a pretty ugly looking double bottom there. I mean, we had that big candle that rejected, so that negates the big drop there really. So you could still probably call that a bottom, but it doesn't give me a lot of confidence. It's got the 20 and the 50 still separating, so it's still looking weak for mine. If it gets past this level here and breaks a daily below here, it's most certainly going to try and push down lower to this sort of level around that sort of 92.50. But I don't know if that's going to happen. I could probably see it doing not a hell of a lot in this area for a little while. So you've got to go down to the smaller time frames to try and scalp this one for any opportunities. But as you can see, like the 15-minute, it's provided a few opportunities, but it hasn't been not really exciting. I mean, even if you were taking the longs from the 20, which you would generally do in this sort of trade, you're not really getting fantastic results. They're pretty small moves and it's fairly tight held. So probably one you just sort of leave alone and wait for the daily candles to actually do something and hopefully get up and pick up an uptrend again, which obviously we need a higher high and a higher low to make that happen. All right, we will move over to we'll go to the euro pound. This is one we don't often look at, but it's been an interesting one this week because it's found itself certainly trapped here on a 15-minute chart, as you can see. So you can see that it's certainly found itself trapped here between the 200 and the other moving averages on a really small time frame. So it's really consolidated over the last trading session. But if we take it out to a daily, you can see that it's basically been flatlining and promising plenty but delivering nothing on the bigger time frame. Now, there's a pretty good reason for this, and we'll have a look at that in a second. But you can see the 20 has been a really good support level for the daily. Okay, so you can see that it's been really struggling to break down below it, and it has rejected off it a few times. Now, when we go to the Euro USD and also to we'll go to the pound USD, we'll do them both at the same time. You can see that both of them are at a place where, well, this is obviously at a pretty serious place of support. It's tried to sell off. Okay, this is on a 1 hour chart. We'll take it to a daily to give us some clarity. I'll move this out of the way. Okay, and I'll blow it up. So you can see that it's still looking like it wants to short. Okay, so we've had the wave down. Okay, the pullback. Had another wave down, we've got an equal pullback, and what we're generally looking for in this instance is the third wave, which is generally the same level as those ones. I'll mark that out for you. I had that marked up, but we'll do that again. You can see that is the same level as that, and we would expect that will be the same level as that, and that will bring this right into this area here, okay, which is a pretty reasonable level of support, which is around that sort of 121.50. That's probably what we're expecting of this particular pair. So it's looking still weaker than the Euro USD, in my opinion. I think that this one is still, the Euro USD is looking relatively strong, even though it failed to make a new high. It's got a little bit more holding it up. It's got this really good support level now. We'll see what it does, but this is going to indicate, my point is, this is what's going to indicate what's happening here. If the euro is going to be stronger than the pound, so the pound does look like it's shorter than the euro looks short, you would expect that this one's going to bounce off here and probably hit our highs that we want it to get to, which is around that sort of 92.50 area in the first instance. That's probably my preferred trade. I'd rather it did that than go short. Because the pound looks shorter than the euro does. So the euro strength hopefully will prevail here. And and kick this one up and get us to that sort of 67 to 70 area is the first target. You don't want to go all the way to this level on the first go, because it's going to, you're not really going to see, we're not expecting to see the euro strengthen that much than the pound in this sort of uncertain time. So it's going to meander. It's been meandering for a while. You can see that. What we want to do is see it just get to that sort of 80% of the range that we're looking for, which is around that sort of 92.80 area. So we'll keep an eye on that one. It's got good support on the 20. So it's still looking better for the long. I'm not interested in a short on this one at this stage because it's not really providing an opportunity that we would enjoy. All right, we'll go to the dollar index. This one's, it's found a little bit of strength on the 4 hour. You can see here. We'll go to a daily to give us a perspective. The last couple of days have been pretty strong. It's smacked back into the 20 now. It needs to break this to give us any confidence that the dollar strength is going to kick in. But for mine, it's still looking strong. It's come off this support zone really well. It's reacted the way we would like it to react. It's held up well. It needs to break this 20. I'd love to see a high closing above this level here. A high on the daily above the 97.80 as a close will give us some really good moves on the US dollar CAD and probably propel that US dollar Swissy up a little bit as well. So we can see why the euro's come to a bit of a standstill as well. It's showing a little bit of strength as this one's showing a little bit of weakness, only a little bit. But this is going to work completely opposite to the euro because the euro makes up such a big part of the dollar index. So just something to keep in mind. But if this one starts to show strength, it is going to weaken the euro, and then it's going to depend on whether it weakens the pound more. So keep an eye on this one, but still preferably going long because it's going to make more sense for the US dollar-based pairs that we looked at. Okay, we will look at the S&P 500 now. We'll take this one out to a daily. Very, very interesting week. We haven't seen anything exciting that would really lead us to believe that it's going long or going short. It's been pretty much flatlining in this area. So between the 31.50 and the sort of 30.50, it seems to be a really strong floor here. Just waiting on news. Like, news comes out every week on this one, of course. So we've got job numbers and all sorts of things happening every week. So it seems to be holding up okay. I think the 30 is the real support, but probably scalping up. I mean, we can take this down to a scalping opportunity, and even that looks a little bit messy. I find this one a little bit difficult to scalp at the moment. It's probably just one of those ones where we need to wait for something to happen. It needs to break out of this zone. We need to see it break below 3,000. If it does that, it's got probably the low 28s in its sights. At first stop probably the 29.30, but still a pretty good opportunity. A good 70 or 80 pips there, but it has to break. It has to close below the 3,000 on a daily to convince us that's going to happen. And likewise, to go long on this one, even for a scalp, it has to close above the 31.55 with a daily to convince us that it can go higher into the 32, probably mid 32s on the long. So haven't got a preference on this one. We want it to short mainly because we think that makes technical and fundamental sense, but that's not the game that it's playing at the moment, so we'll have to keep an eye on this one. So the preferred is the short because it makes more sense, but there is a floor there, so we take either way. If we get a close above the 31 sort of 60, we'll take it long. And if we get a close below the sort of 3,000, I'd like to see a 3,000 close lower before we actually take it short into the 2,800 ideally, but first stop will be the probably 29.30 area.
I hope everybody's had a great week's trading. We've had some pretty good scalping opportunities from the support and resistance zones on the majors that have held up fairly well. So hopefully the market will start to move in a good direction early next week and give us some trends that we can jump on. But other than that, have a great weekend, and I look forward to seeing you all next week.